Herd immunity. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of February 22nd, 2021. And this article in the Wall Street Journal caught my attention this morning, and in the on the Wall Street Journal opinion page says, hey, we'll have herd immunity by April, and they said COVID cases have dropped 77% in 6 weeks, and their opinion is experts should level with the public about that good news. Now, when I see an article like this, I want the data. I want to see it. I want to see a chart. Here's a chart of the U.S. All regions, all-time coronavirus cases, and you can see, peaking exactly on January 9th. There's been an incredible drop-off. So, the headline of the article, at least in terms of the drop-off rate, appears to be accurate. Their opinion is that we'll reach herd immunity by April. That's an opinion, but the drop-off rate, that's the biggest drop since this darn thing started, right? That is the sharpest, biggest drop, and you don't see that in the headlines, and that is puzzling. And so, the Wall Street Journal published that article, and then I said, well, anybody else talking about it? Because we don't already see this in the headlines, right? This is a remarkable development. And so I went on to Google News, typed in the phrase herd immunity, and there's lots of articles. And, here's CNBC, we got Dr. Fauci, he's cautioning against complacency. And then if we go back to Google News, right, he says, hey, we could be wearing masks into 2022. Maybe double masks, right? There's I refrain from political commentary, taking a position on political issues. Certainly, I'm here to analyze the market, and the market is affected by political developments, but I don't express political opinion here. But there is I just have to, say I have a strong libertarian streak in me, and I believe that both the prior and the current administrations have not done well on messaging, and there's the appearance of some elaborate form of game theory about, well, here's the facts, but if we tell them this, they'll do that, and what we really want is tell them that so they do this. And I think most of us would say, hey, just give us the facts and trust that most people are going to make the right decision. So in any case, this is good news with this case drop-off rate I showed on the chart, and the fact that we may have some degree of herd immunity by April, and that would coincide with Easter, which is April 4th. So there may be, a majority of Americans celebrate Easter, whether a secular celebration or a religious observance. It's the beginning of spring. It's new life. It's a good thing, and maybe about the time we celebrate Easter, we can also celebrate, a new chapter in this virus and some degree of getting back to normal, and that would absolutely be welcome. I think we can all agree on that. But like I said, I'm here to comment on the market, so let's talk about the market. S&P 500, I'm showing the SPY ETF here. Of course, here's the big drop-off when the virus really, began to make its presence known last spring, and then since then, markets off to the races up to new highs. Last week, early in the week, put in new intraday highs and then started pulling back. And so, is there going to be a correction? Is there going to be a big market down move? I think that's you can Google that and see all kinds of opinions, and there's an increasing number of commentators who say, hey, we're going to get a correction. And historically, after a big run up, there's a correction. That's a natural, normal market cycle. And, in talking to people, there's a sense of people worrying that they would, have trouble timing that. And, that ever present tension in the market of if it's going to go higher, I don't want to miss on that, but if it's going to go down, I don't want to give away profit. Well, calling the top on an uptrend it's impossible. But there are signs, and I'll do a quick little lesson here using Dow theory from Charles Dow back in the late 1890s. And his theory, this portion of his theory about trends and trend changes absolutely still applies. So, like I said, we can't call the top in a market, but we can have some definitive proof of when the trend has definitely changed. And I'm going to get my pen out for this exercise. So, Dow theory says that an uptrend is a series of higher highs, higher lows, higher highs, higher highs. It's predictable, right? And that you don't have a trend change to the downside until you have low, lower high, new low. And that has been true for more than 100 years. And it's true today. When the big move happened here in last year, right? We had a dramatic low, and then a lower high, and then a new low. And of course, the thing dropped like a rock, right? And this is where I went short, and we made some really nice profit. And then the trend changed, right? It was high, higher low, new highs. That's an uptrend, and it's continued for quite some time. Now, there have been some minor pullbacks along the way, and there have been some real head fakes. It's been challenging. Who said trading was easy? If you look back here in the summer of 2020, there was a big pullback. Was that a trend change? No, because it didn't meet the rules. There was a low, lower high. It did not go on to a new low. It went higher. So the uptrend continued. Now, there was a short-term pullback in the fall of last year, and it met the rules. Low, lower high, new low. At this point, you could have gone short and made a little profit, and then it turned around, and it pulled back again, but it did not put in a new low. And then it continued on. Every little pullback is not a trend change. This one, this one, this one, this one. These are all just part of an ongoing uptrend, right? So how will we know if this current move is a trend change? Well, we'll just follow the rules, right? So this is a little bit of a low, and what we expect, maybe it'll continue, and then a lower high, and if the trend is going to change, it will do this. There's no perfect answer in the market, right? But there is probability. This is a high probability. So if we see this low, and then a lower high, and a new low, I'll be going short, right? And there's a high probability the market will go back, maybe to the 200-day moving average is what heavy white line. There's always this idea of a reversion to the mean in the market, right? And, maybe lower. So my approach is to wait for proof. You can't call the top, but you can tell when the trend has changed, and you can then act on that and get some good profits. Meanwhile, what's the reality? Well, the reality is it's an up market, right? High, higher, low. Hasn't done any of that stuff to indicate a trend change, so we'll go long, right? We'll stay long predominantly. Now, there are things you can short, things that look pretty good, right? Even if the overall market's going up, there's things that going down. And I've got a mixed portfolio. In fact, I've started shorting some individual charts that are showing signs of moving against the market and going down. I'm short T-Mobile, Mondelez, and now XLV, the healthcare ETF. I'm also long Innovia Pharmaceuticals and Bed Bath & Beyond. And you can see I've got 5 open positions. 4 out of 5 are in profit, some of them pretty deep in profit. We're just trading the realities of the market. We're doing that consistently, have been doing it for years. Here's my year-to-date 2021 results. I've been going slow. The market's a little challenging. Closed 8 trades. And we've won 71% of them. Our payout ratio is about 2 to 1. So the winners are about double the size of the losers. Overall portfolio is up 6.5%. And that's in a contrast to the indexes. Even though you see all kinds of headlines about how they're setting new records, it hasn't been that spectacular. The S&P as of Friday's close for the year up 4%. The Dow is up 2.9%, and my trade's 6.55. With being pretty conservative and pretty careful and taking a few trades. So we're going to continue to do that. And if the thing turns down, once it starts, it'll really accelerate like it always does, right? The market takes the escalator up and the elevator down. We'll go long as it's going up. And when it turns and proves it, we'll predominantly go short. So that's a little lesson, some context. This week we got, in terms of economic reports coming up, it's not a big deal. It's not a huge amount of things to worry about. Looking at the calendar, we got Chairman Powell is going to start talking on Tuesday. Tuesday he's going to start testifying in front of Congress about economic conditions, and we got the normal crude oil inventories. Oil is way up, probably going to continue up, and we got some preliminary GDP numbers. We got more FMC talking heads, unemployment claims, pending home sales. Not a huge economic calendar. So it'll be driven by headlines and sentiment primarily. And if the correction's going to begin, we'll get some signs of that. We can participate in it. Meanwhile, we just stay fixated on the realities, and we look forward to that celebration. If we truly have reached herd immunity later in the spring and some restrictions ease, and we can celebrate Easter and maybe do more things in person, and that would sure be a welcome change, don't you think? All right, well, that's it for this week. If you are not a subscriber to my services, there's a link, and you're welcome to join. Some of these trades still have great entries, and we got more coming just like them. Love to have you be part of it. All right, trade safe. Keep your winners big, losers small, and we'll catch you on the next update. Thanks.